And we're back with you as we get our markets open here on a Monday. I'm Marlon Bowling with you. I am joined by Dewey Strickler of AgWatch Market Advisors. He's in Franklin, Kentucky. And Dewey, we noted overnight, we reported earlier that we had an overnight export sale of some corn, and we can take a look at that. But there was also another item in there that was not included in the USDA email that was sent out. And it was actually a cancellation. So let's run through these. We had corn. Sales were 132,000 tons over the weekend. It was to unknown destinations. Then we had a net cancellation, and that would be a reduction of 180,000 tons of soybeans to unknown destinations, so that would go backwards. Let's see how the trade is opening up here this morning. So on the corn market, as we get things rolling here on a Monday, we are down a little bit. We have December trading 2 3/4 lower. We're at 368.5. And the soybean trade will begin with that January contract. We're down 3 3/4 at 914.5. And looking for the wheat trade, let's go to Chicago. And on December, we're down 1 3/4 there. We have July actually down 3 1/4. Kansas City on the December contract, it is lower this morning. We're down 1 1/4 there. The new crop July down 1/2 cent. Minneapolis, December down 1 penny, and July there down 1.5 pennies. So Dewey, your thoughts here? General weaker tone all across the grain complex. What's the overall driving factor here?
I think really, the trade is looking, in my opinion, at the impeachment drama that we have here in Washington. If you sit down and think about it, if things, go not so well for Donald Trump, you're going to have China is going to be more or less in the cat seat here, in which they could gain a little more leverage. So I don't think they're going to be in any rush to do much of anything here until maybe after this week. I'm sure that they're trying to hammer out some minor details, but I think they're just going to sit on the sideline here for a moment till they see how this episode and drama turns out.
You and I were talking right before we came on live here about the fact that this corn harvest is going to be very extended this year. Could last well into next year. Is that right?
Yeah, it is. I was talking to some guys in North Dakota here late last week, and they say, by the time the snows comes in and so forth, there probably will be shelling some corn here in the very early spring. So that means we really will not have a good idea on harvested acres here until maybe well beyond into, say, February, March of next year.
Well, I know John Jenkinson and I have been talking about this for quite a while. That new update on production won't come out until January, and usually I believe that is considered the final word. But I don't think that's going to be the case at all this coming year, huh?
I don't think it will be the final word. I think it'll be on up into maybe late spring. USDA will have to come out, and you'll see on one of the reports in residual here where they've made some changes, and they'll go back and they will reflect that.
What are the odds we can base out this wheat trade anytime soon here?
Well, when you look at the wheat market here, it generally goes lower until about the first week of December. When you look at the exports, they're just so-so. We're on track to reach USDA's estimate of 950 here. But, other than that, we doesn't have a lot going for it here for the moment. Even that 950 is lower than what we were looking at last year. We still got a lot of competition that we're going to be facing with in wheat exports.
Okay, Dewey, we'll return in a moment. We'll open up our cattle and hog trade. Our guest, Dewey Strickler, and we'll be right back. We are talking with Dewey Strickler, and he is with AgWatch Market Advisors in Franklin, Kentucky. Let us open up our livestock trade here on a Monday and see which way they want to go. We'll start with live cattle. On the futures board in Chicago, the December live cattle are trading at 118.80. That would be down 25 cents. Make it 118.85 right now. We have February down 32 cents. We're at 124.65. So a little bit weaker. We are led lower by the nearby contracts. I will point that out. The deferreds are even steady in the August contract for next summer. If you look at the feeder cattle market, currently on feeders, we have November up 18. We're at 146.43. And you have the January contract 72 cents higher. We're at 145 even. And March up 85 cents for the biggest gain so far this morning. It's at 145.07. If we move on to our lean hog market, currently we have the December 35 lower, but all the other months, February on out, are all over $1 lower. Triple-digit losses there. February down $1.15. We're at 70.85. All right, let's find out what the story is here. Very quiet trade on the cattle market here so far this morning. What are the big factors to take a look at here today, Dewey?
Well, I think, the trade may be looking to see how high, the cattle market has risen. We do have the cattle on feed report. No doubt we're going to be looking at an increase here in placements and so forth. But also, too, when you look at the spread between the D's cattle and D's hogs, that's around $56. That's getting awfully wide there. So I think that's also going to start to weigh on the market. Technically, cattle market's acting like it's peaking out.
Now, if they expect higher placements, wouldn't that be negative? And yet we have the feeders trading higher versus the live cattle this morning.
I think that's just because corn is weaker this morning.
Okay, very observant. Let's take a look at the hog market here. A lot of pressure in the hogs. What's up with that?
Well, we have put so much here on this China deal and so forth, and nothing has really come through. I think it's just more or less some continued disappointment over the past 3 days. I mean, the market has just more or less drifted lower here, some fairly narrow ranges, and usually when you have narrow ranges, that means that you just don't have any news.
So when you look at those deferred contracts on the lean hogs, I mean, that is a real high wire act that you're dealing with right now, because that could be an explosive set of contracts out there if China trade agreements would be ironed out and they need to fulfill the missing supplies from their own country due to the African swine fever. On the other hand, if nothing happens, they're already at such a premium, you could stand to lose quite a bit there.
Yeah, that's true. I mean, I think eventually we will get something probably done with China. It may be after the first of the year in January. I think the trade is hopeful to get in December. But, you got a lot of moving parts here. And like I said, in the grain comments, China just may be willing to wait here to see what comes upon this impeachment drama in Washington.
All right, thank you, Dewey. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky.